The European Central Bank is an institution with some unique characteristics, partly because it oversees an area whose borders extend beyond those of a single state. Yet it still fulfills the role of any other central bank. First and foremost, its task is to maintain price stability. It is the ultimate guardian of the value of money. The money we have in our pockets is just paper or base metal, but as long as a currency retains public confidence, the intrinsic value of banknotes and coins is irrelevant. Its value is derived solely from its acceptance as a medium of exchange. However, that has not always been the case. Until early last century, most major economies had adopted the gold standard. Banknotes in circulation literally represented a share in a country's gold reserves. Theoretically, a central bank could be called upon to exchange any banknote for its value in gold. So it was the task of the central banks to ensure they kept sufficient gold reserves to back the currency in circulation. Today, however, money derives its value from its purchasing power, the value of the goods you can buy with it. So the job of a modern central bank is mainly to make sure that the amount of money circulating in an economy is properly balanced against the value of the goods that it can purchase. In that way, the value of the currency can be protected. But a modern economic system is enormously complicated, and the ECB, like other central banks, is involved in a wide range of activities to ensure it all works. The ECB defines and conducts monetary policy within the euro area. It issues banknotes. It conducts operations in the foreign exchange market, buying and selling currencies as it deems appropriate, and it holds and manages reserves of foreign currencies. It also helps to make sure that all credit institutions are sufficiently sound and trustworthy, and to preserve the stability of the whole financial system. Furthermore, it ensures the smooth functioning of payment systems throughout the euro area, so that transactions between banks can be conducted swiftly and effectively. The ECB does all this in close cooperation with the national central banks of the euro area. Together, they form what is called the euro system. In fact, the governors of these national central banks, together with the 6 members of the ECB's executive board, form the governing council of the ECB, its supreme decision-making body. The members of the Eurosystem meet regularly to coordinate and discuss their activities in a number of committees made up of experts from departments within the ECB and the national central banks. The national central banks are also the ECB's shareholders. Shares are attributed according to the population and GDP of each country. But this does not mean that larger member states have a greater say in ECB decisions than smaller ones. In fact, the ECB is a truly supranational institution. Its staff and board members are not there to defend the interests of any individual member state, but to make the best decisions in the interest of all euro area citizens. Having a single central bank for such a vast area, which covers different states with different traditions, has never been done before. And yet, the euro is a reality, and prices within the euro area remain stable, just as the Treaty on European Union demands.